So, Aaron, what is the price of one Bitcoin today, and how big exactly is the market cap for Bitcoin as a whole?
So now I think we're close to 7.1K. And at 7.1K, the entire market cap of Bitcoin will be approximately 130 billion US dollars.
So 130 billion is the market size for Bitcoin right now.
Bitcoin, yeah, that's a fifth of size of Facebook. And it grew into, and it's an entity without CEO, with no founder, with no centralized authority, and 130 billion of value has been created in the past 11 years. Bitcoin was launched in 2009, so we're in 2020 now. So it's been going strong for the past 11 years, and I think you can say that it's an only asset class that trades 24/7. Right? Your stock market, your commodities market, they're closed during the weekend. Bitcoin 24/7 all across the world. You can trade anytime.
Right. So who would exactly be interested in investing in Bitcoin? Today, we actually see many retail investors getting their hands into Bitcoin. Do we see the larger players like sovereign wealth funds, money managers, asset managers taking an interest in this field, or have they already had their hands dabbling in this? And how will that exactly impact the value of Bitcoin?
The Bitcoin, I think, is the first asset class that has been popularized, made mainstream by the retail investors. Most other asset classes, right, is usually start for the instis, right, the big boys, and then it trickle down to the retailers. But Bitcoin is different. It started off the retailers, and then 2017, right, we saw how Bitcoin went up 20 times in a year, from 1,000 at the beginning of a year up to 20,000, and then it crashed. Right? And people say, oh, that's tulip bubble. Right? It basically isn't, right? Tulip bubble is gone. Bitcoin has crashed easily 5 times already, more than 80%, and it's still there. But in 2017, what happened was a retailer frenzy where everyone went to buy the retailers, right? But in order for price to sustain, in order to go to in the market caps of trillions, we need the big money to come in. So today, yes, retailers are buying. To your question, are the big boys coming in? Are the sovereign wealth funds coming in? The pension funds coming in? Your corporates coming in? The instis are coming in. Yes, they are. But we do not know yet whether the sovereign wealth funds are buying or not. We hear rumors about it. But I can tell you that organizations are buying. We have people who are running traditional hedge funds buying, traditional macro asset funds, they're buying for themselves. They're macro asset managers. They can't buy for the funds because the mandates, right? But we are gradually seeing more and more proper funds entering into the market. So Howard and Yale Endowment, the two biggest endowments in the world, I think the combined asset under management is $80 billion, right? They're bigger than our Khazanah. They are indirectly invested in crypto. What I mean indirectly is that they invest in the fund, they invest in crypto. Right? So these are made public. Pension funds buying, I don't think so yet. Sovereign wealth funds, there are rumors that sovereign wealth funds are buying. Central banks buying, we also do not know. The reason why none of these big entities are coming out to say they are buying, there are two reasons. Why they are not buying and why they didn't come out and say they are buying. Number one is liquidity. Bitcoin is so small, 130 billion, right? It is really, really small. Right? If the big boys come in, right, and they say that they buy, it will take off, the price will explode. Right? And it's also a matter of game theory. If I'm a central bank, I'm a sovereign wealth fund, if I see value in this, likely other sovereign wealth fund and central banks will see value in this as well. And if any of them declare they have bought, right, it will pop. So it's best to do quietly in the background. So I have a feeling in the coming 10 years, it really depends, right, how our monetary system evolves. If central banks just keep printing money, our monetary system will collapse, and probably gold and Bitcoin will find its position, right? So what can actually kill Bitcoin is good behavior by your central banks. Right? So if things as is today, the Federal Reserve keeps printing money, probably I think it's a matter of time. We have central banks for one of the smaller countries will say that, hey guys, we have gold in part of our global reserve. So today we are seeing, I think it's a matter of evolution. You can't have the big boys come in and buy now, because apart from liquidity, right, it's also because of the infrastructure. These boys are regulated. They are managing people's money. So the infrastructure is not mature yet, but it has matured a lot in the past 2 years. Bitcoin crashed in 2007, that is correct. But when things crash, no more speculation, everyone goes back to building. So the infrastructure development has grown a lot in the past 2 years. Custodianship, right? Regulatory insights.
Mm-hmm.
regulatory framework, liquidity has improved. So across the entire value chain infrastructure, right, these things are going up. We have things like Fidelity. Fidelity is one of the biggest custodian. They do bigger custody play in one of the biggest custody play in the world. If I'm not mistaken, I think they manage around 2 over trillion worth of assets under that. Right? These guys are already offering Bitcoin custody, and then you have BAKKT. It's a futures exchange, Bitcoin futures exchange, and guess who's backing BACT, or rather who's the owner of BACT? They are the owner of your NYSE, ICE. What the thing is called Intercontinental Exchange or something like that. Yeah. So the big boys are coming in, but well, they can't be cowboys like this. So they gotta take the time, familiarity before they can go on. Right.
Okay.
So who buys Bitcoin? I would say anyone, any institution.
Right. So I mean, let's come back to Bitcoin again. It is on its own. Bitcoin is similar to gold. It does not give a yield, and there is simply no use for it. Right? We have it in our thumb drives, and it just sits in the room doing nothing. So where is the value in Bitcoin?
So I am a value investor, right? So people say in order to value something, you need some form of dividend, some form of cash flow, some form of utility or the use case for something to produce, to have value. So those days, without understanding monetary economics, right? Monetary economics is one aspect of economics I realized that is not widely taught or not taught at all in universities and college. I picked up monetary economics through Bitcoin. So that itself is the whole field of economics and about value creation, right? So that those days I do not appreciate gold. I don't understand value gold, but after understanding monetary economics, the history of money, then I understand that money derives value from only one from on three situations, right? As a store of value, as a medium of exchange, as a unit of account. Store of value, simple. I can use it to hold my value over time and over place. Medium of exchange means I can transact with you. I give you my Bitcoin to get something out of you, right? And the third one, a unit of account. Unit of account means how we can price everything in Bitcoin. Bitcoin is not there yet. Bitcoin is not a unit of account yet. Bitcoin is not a medium of exchange yet because of volatility. But today it is a store of value, right? It's a hard asset. I mean, it's digital, but it's still hard asset in the sense that its supply is capped. So when it comes to monetary assets, right, a lot of things, right, a lot of other normal assets have some monetary premium. In the case of Bitcoin and gold, most of the value is derived from one thing: monetary premium. 100% of its value in Bitcoin is about monetary premium. What I mean by this is simple. I buy a house. There's a use case, there's a utility, right? For me to stay or for me to invest. But you see a lot of foreigners buying properties in your Sydney, your Melbourne, your London, and all this, but the house is left empty. Why do they do it? They don't use it to stay, they don't even rent it. They use it because it's a store of value. So say the property is worth £1 million, a large chunk of that value is derived not from the fact that I can rent it out or I can sell it, but derived from the fact that there is a monetary premium in this real estate that I buy. So probably 30% of the property value is because of this monetary premium, and the remaining 70 is because I can rent it or I can generate cash flow. But in the case of monetary assets like gold, Bitcoin, and silver, right? A huge chunk of their value is derived from this fact that they are a great store of value. Hence, we call it a monetary premium. People like to say it's intangible, right? There's no value in it. I cannot touch it. Why can it? Why it can have so much value, 130 billion market cap? I'll put it this way, Google and Facebook is the same thing, right? What you're actually buying is the software. Right? You're buying the software, right? The brains behind it's all intangible, right? And yet people are valuing these companies at $1 trillion and half a trillion, right? So the same thing goes with Bitcoin, right? The software behind it, and in fact, this software is immutable and cannot be changed easily.
Right. So I mean, we see the potential of Bitcoins going up tremendously. The upside is unlimited due to the limited supply and the interest from the institutional investors. But what do you think about Bitcoin being wiped out? Zero value. Is that a possible scenario?
You'll be arrogant ignorant for me to say that there is zero chance of it being wiped out. The fact is there is a non-zero chance that Bitcoin could be destroyed one day, right? It can go to zero, right? No doubt about that. There are a couple of scenarios that could lead to zero. So I would say there's a non-zero chance that it still can go back to zero. But the fact is that every single day that Bitcoin survives and runs, it means its probability of surviving and growing bigger and to establish itself as a solid store of value, the chance of it keeps increasing every day. They call it the Lindy effect. Every single day that something survives, chances are it will keep surviving longer and longer.
That's
So,
good to hear.
yep, it can go to zero. There's no doubt about that. What's important to understand is that if you were to buy Bitcoin, the profile is we call it a symmetric profile, meaning it gives you a symmetric return. You might lose 100% of your money, but chances are you might gain 100 times your money. Hence the subject of our interview.
So in the last decade, the value of Bitcoin has actually risen more than 9 million%. That is 90,000 times. $1
90,000 times.
in the last, if you invested $1 in Bitcoin 10 years ago, today it is 90,000 US dollars. How do you see the value of Bitcoin faring today, tomorrow, and the future?
So 9 million%, right? 90,000 times. So you might
that's
think
right.
that all the upside is gone, but yeah, it's a bit ridiculous, right? So but we have to understand it started from a low base. It was less than a cent, less than 0.0001 cent when it first ever traded, when there was a price in the market. Then of course from such a low base, right, coming to $10,000 or $7,000, your percentage gain is huge. Now I thought I lose out all the upside, right? But to get 50 times or 100 times your returns today, I mean, it's not comparable to 90,000 times, right? But 50 to 100 is still a ridiculous potential
Pretty good.
return profile. Pretty good, right? And when I say 50 to 100, it's not in the span of a millennia, I'm talking about next 5 to 10 years. So what I'm saying that today, a $7,000 Bitcoin could be 350,000, could be $500,000. In fact, it could be $1 million. You're talking, if you're asking me, right, you give me a few time frame, like today, tomorrow, next week, or years to come, right? How I'm saying is that Bitcoin is a multi-decade asset play, right? Today, tomorrow, next month, or the coming 6 months to a year, I don't think there's much price action, right? But there is a significant event happening in May next month, which is called the halving. Bitcoin supply, as I mentioned earlier, from 12.5 Bitcoin per 10 minutes is created, it will be reduced to 6.25, hence halving or hardening, right? So there will be a supply shock in the market, and there will be some form of impact towards the price of Bitcoin now. But I would say if you were to buy, the huge upside will come in the next 5 to 10 years. So 50 to 100 times is still possible. Those days, right, before I understood Bitcoin and before I understood monetary economics, those early adopters were telling me that, hey, Bitcoin can be $350,000, man. Inside me, I think they're insane. I think they're smoking weed, man. But nowadays, I'm going around evangelizing, right, and telling people this damn Bitcoin can go to $500,000, can go to $1 million. So, but to put this into perspective, right? Remember we mentioned you brought up about gold, Bitcoin being digital gold, right?
Mm-hmm.
At around $400,000 US dollars per Bitcoin, that is equivalent to the market cap of gold.
Wow.
Gold market cap today is around 7 trillion or 10 trillion. It has been fluctuating around there, right? And Bitcoin is only 130 billion. So you can see where the upside is just tremendous, right? If gold, then people ask me, so where is the money going to come from to bring Bitcoin to that kind of level, right? So let's understand our global the value of assets globally. Real estate, $200 trillion debt. $200 trillion dollars in debt. Equity is around, stock market is around 70 trillion. Cash or fiat money is around 90 trillion. So if you add all up, right, is about what? Probably 500 trillion, 600 trillion worth of total value of assets in the world. So Bitcoin just have to establish itself further as a reliable store of value, and you will start scraping some value out of this real estate, debt, equity, gold into Bitcoin, and you reach a scheme of things is still not a lot. But $1 trillion for Bitcoin is 7 times its price today. For a believer like me, it's a matter of when, not if. But as much as I'm evangelizing that it could go up 100 times, I'm also aware that there's a risk that it might not go up 100 times, it might go down to zero, or it might only go up to 5, 10 times. I'm still happy with that kind of profile, right? But given the information we have today, given the development we have today, what's happening with our monetary system, it's more and more likely that Bitcoin will eventually reach that status, will reach that kind of valuation. And whether you go up to 1 million and come back down to 200,000, it's still possible, right? Things are volatile. When you leave things to free market forces, this is what you get, volatility.